Good day there, Wealth Press subscribers, viewers, traders, and investors. It's that time again for another Monday morning roundtable. So here we are, 10, 11 days out from the election, and markets are, well, what are markets? Markets are inconclusive. So what's happening out there, Roger?
Well, I think we're actually about a week away now from the elections, at least officially. Granted, by the time we find out who's winning the election, you may be right. It may be a few weeks or a month. Basically, the market is struggling right now with price disparity in terms of who is going to lead and who is not. Beginning of the weekend, markets were really liking Biden. Now it appears that we may be seeing a reversal. We just had the poll come out, a national poll that says that Biden, that the results have narrowed by about 4 basis points in Trump's favor. This morning, the S&P was not lagging the Russell 2000. And we are seeing some utility stocks that are not evergreen making a comeback. Now, with that said, we are still, stocks like BABA are still doing very, very well. Stocks like NEE, the evergreen energy, is still topping the utilities, which is leading the market right now. So I believe that we are going to have a volatility without directional bias for the remainder of the week. Now, you also have to keep in mind, we've got GDP coming out this week. Typically, in getting ahead or in anticipation of the GDP, the market tends to cool off a little bit as well. So I'm looking at this week's trading action as a midsummer, mid-August Tuesday that's coming off or beginning to look ahead into a holiday week. I think that's probably the scenario that we have ahead, especially when you take a look at the fundamentals and you look at the congestion pattern that's developing. It looks like that may continue for a few more sessions.
Okay, so the Dow was down 400 points at one point this morning, and the U.S. has set another record for intraday coronavirus infection rates as of yesterday. So, and do you think that's having a bearing on things, and is this going to affect the outcome of the election at this point? Adam, what's your thought on that?
Yeah, so it's not just the U.S. We've seen the entire globe for the most part. I mean, Europe had record numbers as well, and cases are ticking up all over the place. So it's definitely a concern. It's just an unknown. People just don't know what's going to happen or when this will end. Markets like certainty, and to Roger's point, which is a great point, we have the election in a week. So what's going to that's another big unknown. And whether it's a contested election or Trump wins or doesn't win or whatever happens, a lot of unknowns. So usually, and plus you have a ton of earnings that are coming out this week. We have Apple, we have Microsoft, we've got Facebook, I believe, Shopify, so on and so forth. So we've got a lot of stocks that are reporting earnings. And that's also an unknown. And then we have GDP. So whenever you have a lot of these big unknowns that are setting up in the periphery, usually you don't see huge positions taken before those big question marks. Now, that could change if we see the record number of cases continue to tick up, or we see some other external event impact the markets. That could cause stocks to go up or down. But for now, there's a lot of unknowns out there, and I think traders are just doing their best to digest the move and see how that will impact markets going forward for the rest of the quarter and as we wind out this very, very interesting year.
Mm-hmm. Patrick, from north of the border, how do markets look to you?
Well, you know what, I think, well, obviously, I agree completely with Roger and Adam that going into the election, we're going to experience just a lot of volatility, directionless volatility, setting everything up. And I think everyone's anticipating what's the next big move. I mean, if there's a blue wave and we see that there's a democratic control of the circumstances, it really does create a scenario where there's going to be a large monetary stimulus coming in that's going to potentially drive a big market impulse. But at the same time, if we see any scenario where there's a mix between, let's say, a Republican Senate and or a Democratic president or vice versa, I think that there's a real chance for stagnation or even deflationary forces come in, because I think the best case scenario for the stock market is that either we have both a Republican Senate and president or a Democratic president and Senate, right? A mixed scenario is really where a lot of the bigger question marks. And so obviously, like Adam was referencing earlier, I think that we're going to these earnings from all these major tech companies. I think the 29th right now is the big day when all of these big earnings come out from these tech companies. It's going to be the focal point on the very short term. But then really it's going to be how do the chips land after the post-election. It's going to drive the new big macro trends that we have to really watch for, because I wish I could give you a forecast. I really don't know. It's going to be really interesting. It's about having a playbook of how to position yourself coming out of it.
Sure. And Jeff Z, how does all this inform your trading strategy going into this week?
This is it, man. We're in the end game right now. It's the market's down today, not so much because of the stimulus. Everyone's blaming it on the stimulus, but the reality is that we're getting closer to the election, and it's really still a 50-50 ball. It's still a coin flip. And as Roger was saying earlier, you're tightening in a lot of the swing states that are making people nervous. We're almost exactly in the same place we were in 2016 from an aggregate polling standpoint in the swing states. And although a lot of people have priced in a Biden victory, the market's telling me something a little bit different. It's telling me that it doesn't really know. To go on maybe a little bit of a disagreement with what Patrick was saying, if you get a Democratic president and a Democratic Congress, I think a lot of people are concerned, and I heard Paul Tudor Jones talking about this, about the tax change, not for income tax, but for long-term capital gains. We're going to go up to 42%, which is incredibly high. You're going to see a lot of people that are going to try to get ahead of that change, and there's going to be a lot of tax harvesting if that happens by the end of the year. And I think it could get really, really ugly if that's the case in the short run. I mean, if you've held this stock, if you're a fund that's held this stock, and you're talking about the difference between 22, 23%, and 42% in some of these positions, you're obviously going to want to pay 20% less tax on those profits. So something to pay attention to.
And if I may just interject on both of the comments, because this is a very, very important with both Patrick and what Jeff said in terms of this topic about having a Democrat government and having a Democratic president or having a Republic. They both are making a very, very good point, and I wanted to say why, because in the current scenario, I agree with what Jeff is saying. But statistically speaking, Patrick is 100% correct, because we just did some studies on governments and patterns and how it impacts the market. And the market tends to really rally strongly when the government and the president are aligned together. In other words, Democratic Senate and House and president or Republican. So that's when the markets, if you look over the last 50 years, the biggest runs we've had in the stock market, when you have the president and the government on the same wavelength. That is very, very true. But I do have to agree, based on what's going on with the government right now and based on what's going on with economy right now, in the current scenario, I agree with Jeff. But that is a very interesting point that people should know, that the government really, because there's been a lot of talk about it's better if President Trump, it's better with a Republican, it's better with a Democrat. The truth is, it's better when they're both aligned. So that's just something that readers or viewers should know.
But allow me to finish. So this week, you're also looking at these tech earnings. But today, we're back to the same trade we've been talking about for 3 months on this show and other shows at Wealth Press. And you're seeing this coronavirus fear hitting Europe. There's lockdowns, fresh lockdowns in Europe. You're seeing stocks like SAP, giant German software company, down 20% in a day. Like, this is unbelievable moves that are happening. But you're looking at some stocks in the US that are not going down, and they're the stay-at-home plays again. You're seeing these Amazons, these Etsy's, these stocks are getting bid today. So I think we got a little bit ahead of ourselves. I still think this market lives or dies by the winners. And I think the winners could come under pressure if you get Democrat blue wave because of profit harvesting, because those are the winners. There are people that have profits in them. You can't take profits in American Airlines if you bought it at 20.
Sure. Okay, so then if the uncertainty surrounding who is going to win is so prevalent as far as what I'm hearing is concerned, and we have the added uncertainty surrounding the willingness of the loser to go quietly, is this all adding up to an accelerated and expanded degree of uncertainty towards markets? Or is the market kind of shrugging it off and just reacting to the coronavirus, and the election is chips fall where they may? And I'm going to take that to Adam.
I'm going to go out on a limb and predict, if you will, without predicting. But I have my spidey senses, let's put it that way, not a prediction, but my spidey senses tell me, A, Trump is going to win, B, the market's going to go higher. I don't know why that's the case, except for the fact that last time it's eerily similar. You know, they say if you don't study history, it repeats itself, and you just repeat it, blah, blah, blah. In 2016, we had the exact same scenario with the polls, where Hillary was winning. Even the last debate, if you remember, the moderator asked Trump directly, what are you going to do when you lose? Are you going to concede, or what's going to happen? And Trump responded and said, we'll wait and I'll let you know. We'll wait and see, something along those lines. And what happened? Not only did he win, but he won by a landslide. Now the same exact thing. Everyone's expecting the blue to win, or the blue wave. Even Paul Tudor Jones mentioned it last week, like Jeff mentioned. But I don't know about any of you. I'll ask you guys. Anybody on this panel or anybody watching ever participated in a poll for the election? Like actually voted and say, "Hey, I'm going to vote for this, or I'm going to vote for that." I haven't. I don't know anyone who has, and I've got a very large audience, and I know I vote, and I'm assuming everybody here votes, and are part of the audience that I've talked to, interact with, vote. And I don't know one person that's actually participated in any of these polls. I'm not dismissing polls. All I'm just saying is that you take them with a grain of salt, if not 2 grains of salt. So I remember back in grad school, I have a master's in political science and undergrad in political science as well. We used to study polls and then the outcomes and see if there's a correlation there. And the reality is it's a spurious correlation at best, if one exists at all. That being said, I don't believe the polls are really forecasting the pulse of America and the voters. I still think that there's going to be the silent majority by definition, which is Trump's base, is silent, means they don't participate in the polls. So I don't know what happens. Obviously, I'd be silly to guarantee this is going to happen, but the market's not selling. The big difference between now and 16 is the market is not selling off the way it did back in 16. Before the election in 16, when it was a foregone conclusion Hillary was going to win and it was going to be a blue wave, the market was tanking, and then Trump won and the market soared. Now we're pretty stable. We haven't really tanked. We had a little correction back in September, but quickly the market jumped right back up, and the indices are now just a few percentage points off of an all-time high with all this chaos going on. Imagine if you had this back in March, where you have record high, corona cases, and we would have told you back, right before the election, this would be happening, and the markets aren't falling. The fact that the markets aren't falling with all these uncertainties, to me, is very, very bullish. And I think I always like to say the market is speaking, or I always like to ask, are you listening? And now when I listen to the market, it's pretty bullish. So that being said, that's my 2.5 cents of what I think is going to happen going forward, for what it's worth.
And now you are out on a limb as predicting Trump's victory. So we'll come back to you on that one.
Sure.
Patrick, so this is all very interesting. Does the action in the U.S. market affect how you're treating your investment style in Canada, or are you mostly involved in the U.S. market since this is your first time here?
Oh, I'm a macro trader, so I'm trading all the global indices and currencies and commodities. So, and it's not directly influencing my selection of stocks in Canada or anything like that. But it is interesting to play. Like, there's a couple of things that I would say that I want to comment to build on to what Adam was talking about. I actually think that this time around, the market will not be surprised by anything. I think that there was a legitimate surprise the first time around when Trump pulled that one off. But there is no surprise if Trump wins. I think that the market is discounting so many of these things already in. And so therefore, really what it comes down to is what will be the big macro drivers in the post-election period? Where will the money be made in that move? And one of the big things that I'm going to be watching, let's just say Jeff's scenario plays out and there is going to be tax loss selling of some sort that emerges in the post-election period. One of the big trades to watch is sector rotation, which is the idea that the FANG stocks, which have been the easy trade for this year, start to underperform, and that money starts to go and play a lot of the fallen angels and those things that have just been dead money for quite a while. And what if that rotation really starts kicking in? I don't think it's really shown yet, like things like defense contractors, airlines, energy stocks. So many of these things have just been in the doghouse. It's just the charts look awful. They've been flatlined. But what if that rotation starts to kick in? There's going to be some compelling opportunities that we have to be aware of and watch to see if those trends emerge. And if they do, there's a potential for big money on a lot of those opportunities. That's what I'm going to be watching.
Mm-hmm. Okay, Roger, we've seen that there is definitely some kind of stimulus coming. Looks like it might not happen before the election. The stimulus has started to happen on a pretty large scale, and that generates liquidity heading into the markets. So is that what we should really more or less be focused on, rather than the sort of moment-to-moment headline events like coronavirus, increase in infections, and that kind of thing?
Well, yes and no. I think it's a little bit of both. I think here's my point of view, and I'm glad you've asked me this question. I think that what happened in beginning of this year and end of last year, the whole COVID-19, how it shaped America, the whole fall down, the reaction of America and the rest of the world. I think that, and the aid that we will have a package, whether now or after the election. I'm still hopeful it's going to happen before the election, because I think that will increase President Trump's win rate. But again, I don't want to get too political here, but I believe what happened beginning of this year is shaping the economy. It'll continue to shape the economy, because I believe the COVID-19, the Fed aid, the central banks, I think that is a lot more powerful than the presidential election in light of what we are seeing right now, in light of this COVID-19. I think the presidential election is going to be a big part of it, but the predominant wave that's driving this market, the stay-at-home economy, the adjustment of society to it, the unknowns, I think that's what's going to be driving the market over the next 2 years. I don't think it's going to be who's going to be president, because even regardless of who's going to be president, there's a limit to what they can do in light of the factors that are at hand. We've been dealt a certain hand. That hand is stronger. That hand will overcome the presidential election, in my opinion.
Mm-hmm. Okay, Adam, then you've sort of stated unequivocally you think that Trump is going to be victorious. Are you putting your money where your mouth is? And if so, what does that entail?
Yeah, so I believe Trump is going to win. I do have a investment thesis or scenario set up in which the market goes higher. Like Roger just said, by the way, which is a fantastic point, the global money, the global central banks, and the easy money that's just coming and flooding the system with liquidity, and Corona are both two external events that transcend any election, any political leaning right or left or up or down or anywhere in between. So that, for me, and as Roger said, is the last 9-10 years since the 2008 financial crisis has been the driving factor for global markets. So it doesn't matter if you look at stocks, bonds, commodities, currencies, anything in between. The fact is that easy money is here to stay. And whoever comes in, the Fed is supposed to be apolitical or their own entity, not swayed by politics. They're looking at, they have a dual mandate, and that's to help maintain employment and to make sure inflation stays around 2%. So as long as the economic reality on Main Street stays as is, which is impacted by coronavirus, unemployment's high, so on and so forth, and the economy's sluggish and people aren't going to the movies and going out to restaurants, so on and so forth, you're going to see easy money from global central banks. Now, that being said, if you have a complete surprise or you have a gridlock or a contentious election or some external event that just really just throws a monkey wrench into the equation, then obviously stocks are going to fall because you're going to have a tremendous amount of uncertainty for a short amount of time until you get clarity. So the way that I'm investing is I'm bullish on stocks or on any asset class for that matter that's a direct beneficiary of all that easy money that's being injected into the system. So just like I mentioned before, I think it was a few weeks ago or a few months ago at this point here on the show, it's almost like a game of musical chairs where the music's playing, everyone's loving life, they're dancing, they're, all that kind of fun stuff. And then the music stops, whoever the last person standing is, then they lose. And in this world, with the analogy with Wall Street is right now, the music's playing, markets around the world are reacting well to all of this easy money. Eventually that's going to stop. When it does, whoever doesn't understand that and adjusts is going to lose. Until then, the music is playing and markets are reacting well to the easy money. And look at the stock market. I mean, what, you're 3 or 4 or 5% or 6%, depending on the index you want to look at, 8% below an all-time high. So it's, I mean, that's on a bigger picture. That's barely, I mean, that's nothing compared to how, and you have record number of corona cases all over the world and no sight of any change in that happening anytime soon. So, you know, riddle me that, so to speak. And that's the market speaking, saying, yes, we're, for all intents and purposes, the reaction to the news is very bullish from my humble standpoint. And as long as that continues, I think the path of least resistance remains higher.
Sure. So, Jeff, to Adam's point, easy money implies easy targets, shooting fish in a barrel stocks. And it looks like we could be setting up for a repeat of March this year. Infection rates flying, stimulus imminent, and the market's gone hog wild, though it's had a bit of a pause. Are there some real easy targets for you as a trader?
There's never, I mean, I'll give you an easy macro trade. If you want to know how to trade coronavirus globally, trade FX. So when the US was lagging and getting a lot of cases and everything was blowing up here, the dollar started getting killed. Now we're seeing Europe is starting to have a real hard time, and a lot of bad shutdowns are coming, and the economy is really in a tragic situation. You're seeing euro weakness, and I think euro weakness can accelerate at this point. That's one easy trade. Another easy trade is, I agree with Adam's scenario that the market's 50-50. And Patrick said this too, and Rod, we've all said this. Nobody's going to be surprised. It's 50-50. There's no clear signs. But if Trump wins, and I'm beginning to think he's going to, actually, not beginning, I've been thinking it for a while, full disclosure, Trump wins, financials are going to go, they're going to go, you know what, up. And I'll tell you why. You've had this huge steepener in the curve, which has been really bullish for banks to make money. You've got global volatility, which they kick ass on trading, make boatloads of money. The only thing that's acting as a wet blanket on top of bank stocks ripping is this prognosis that you get this blue wave, you get huge banking regulation, you get huge Wall Street regulation. And I can't for the life of me figure out why they're kicking Biden all the money they are, but it is what it is.
Okay, so Patrick, do you also believe that there's a higher chance than average of Trump remaining victorious? And do you see any easy trades from your macro trading perspective if that is the case?
Well, I think that he has a legitimate chance of winning. I don't know if I'm going to stick my neck out and actually say that he is, but I'm not sure if I completely agree with Jeff on the banks. Like, though I could see regional banks having lots of room to recover, maybe playing them from a regional bank perspective. But I think that we're in an environment where financial repression is going to be the theme, and the steepening in the curve that we've seen may not be sustainable. In fact, if we have a scenario where, let's say, Biden wins and we have a Republican Senate, we could see the long bond rally big, complete flattening, and we could see a scenario where banks are going to stay in the mud. That's I think that there's playing a lot of the really beaten down sectors outside of the financials is somewhere that I'm a little bit more interested in, and you know, maybe sticking with things like infrastructure, energy, and other types of plays like this. And maybe if you're going to do financial, stick with just regional banks would be sort of what I would be thinking from that kind of a perspective.
Okay.
I'll take the other side of your energy trade. We could just do a swap.
All right, sounds good.
No gambling, except in the market, of course. So Roger, consolidate all of this for us. It's been very dynamic, lots of different perspectives here, lots of potential for what the future might hold. What is our subscriber audience watching today supposed to do with the money they've got to put at risk today?
It's a great question, and I think the panel here has made some really strong points today. All of you guys have did just an amazing job of bringing all of the factors to the limelight. What I find really interesting, and I think we need to right now be very cautious, because we truly don't know what's going to happen. We have to play with the cards we are dealt with right now. A lot of the things that people are hearing a lot of the news is there to create a drama, to create a sense of something as imminent as happening. But the truth of the matter is, there's been a lot of talk. For example, this is a really good example. There's been a lot of talk about energy markets, all right, and a lot of talk. Well, if Biden wins, we're going to go to evergreen. If Trump wins, we're going to go to the regular traditional energy. The truth of the matter is, over the last few years, evergreen or renewable energy is now driving 56% of this country. That number is going to go up regardless of who's going to be president. That's just a tech trend that's going to continue. That's the future. No one is going to hold it because nobody wants to pay for, and nobody wants to create dirty energy if we can get the same benefit from renewable energy. It's just the way the world is moving. So there's a lot of factors that this presidential election will not impact as much as a lot of the people, a lot of the public believe it will. That's factor number one. I just wanted to use renewable energy as an example. Factor number two, and this is to Adam's point. If you look at there's two 6-year periods between 2008 and 2020. If you look at the first 6-year period, okay, the global economy went from $30 trillion to $70 trillion between 2008 and 2014. That's when the Fed and central banks were putting a lot of assets into the market. When Fed and central banks put money to the economy, the global economy doesn't grow, it doubles in size.
Right.
From 2014 to 2020, the Fed did not put money into the economy for the most part. The market did not grow at all, like $2 trillion. So you have a 6-year period or a 7-year period when the global economy more than doubles. And then you have a period where the global economy doesn't do anything. And who was president during that period of time? I guarantee you had very little impact on this. It was the fact that central banks and US was printing money and putting money into the economy and created liquidity. We are right now in that same position. And this is why I think the presidential election is going to create a few rough points for us down the road, as Jeff Zanninari said, but ultimately, I think we're going to end this year on a good note. I think retail sales are going to surprise. I think the reactive nature of this country and the world and how quick stores like Target, stores like Walmart have adapted their sales right now. They are now not in the red anymore. They are now in the green or in the black, depending on how you like to phrase it. But the point I'm making is the world is adapting to the economy we have now, and we have to look beyond the presidential election. And I don't think the presidential election is going to have a longer term impact on this economy as much as the central banks and the Fed and what has transpired, as I started this today with what has transpired beginning of the year and what is shaping the economy. And that's central banks, the Fed, and COVID-19. And I think we have to be very cautious right now till the election. We'll have some bumps and then things will resume the way they've been going.
Great. Thanks for that, Roger. We'll leave it there for now and come back to everybody during the week. And thank you very, very much for your time. Have a fantastic week.